Good afternoon, everyone. On behalf of Women Members Excellence Committee of ICI, it is my pleasure to welcome you all to Yashaswini, an Idol Series 40. Yashaswini, an Idol is a Wednesday series of a program conducted by the WMEC for the Women CS and by the Women CS. This series is an extension of Sky High Symposium, which has concluded its 100 episodes. It is one of the committee's initiatives to not only disseminate information to women members on technical updatation and non-technical skills, but also to empower, inspire women members to come at forefront and realize their verbal skill at public forum. I would like to introduce our first speaker, Siyadhara Gandhi. She is FCA, CS, and founder of a leading CA firm. She has extensive experience from her tenure at BSC Limited as a listing reviewer and as a taxation manager with a reputed CA firm. A regular speaker at ICI and institution, she conducts lectures on GST, income tax, audit, and tally application for professional development. I would request Sarah Gandhi to kindly start with your session. Thank you.
Dhara ma'am, please proceed, ma'am. Dharani ma'am.
There is some issue with audio or video. Okay.
Dharani ma'am.
Yeah,
Dhara,
Yeah, ma'am, it's
please.
your turn. You can just proceed, ma'am.
okay, sorry. The voice, the person who was speaking, the voice was not clear. Well,
Yeah,
I
you can proceed, ma'am.
yeah, sure. So, good afternoon, each and everyone. So, as you all know, uh, the due date of filing GSTR 9 and 9C is on the TOS. It's 31st of December. And we'll be taking a topic regarding how to fetch your files from Tally Prime for GSTR 9 and 9C. What are the basic do's and don'ts while filing GSTR 9 and 9C, and what basic documentations need to be there while filing GSTR 9 and 9C. So I'll start with the session. So first, who is liable to file GSTR 9? So GST registered person whose turnover exceeds 2 crores have to file GSTR 9, and who are excluded from filing GSTR 9 if they are input service distributors or casual taxpayers or non-resident taxpaying, they are excluded from filing GSTR 9. So how Tally will be helpful, while filing GSTR 99C. So first thing I would like to say is you do not get any direct report from Tally for GSTR 9 and 9C, but we can fetch the details, fetch the data for GST reconciliation, 3B reconciliation, 2A reconciliation, 2B reconciliation to Tally Prime. So what are the shortcuts? What are the tips and tricks? We'll be covering it today. And what further benefits are there? If your client have multiple GST number, then you have an option to get all the details of all GST number under same PAN through the same tally data. You can get multiple report, and it is very easy for us to, fetch the data and check the data through tally. So this is the relevant notification notifying GSTR 9 for financial year 23-24. So we'll be covering this provisions in detail in next slide. So annual return, you have GSTR 9, 9A and 9B. 9B is still to be notified. So GSTR 9 is to be filed by normal taxpayers. GSTR 9A should be filed by the person paying tax under Section 10, that is composite scheme. And annual return with reconciliation statement 9C. So if your annual turnover exceeds 5 crores, then it is mandatory for you to file 9 as well as GSTR 9C. So GSTR 9C will be allowed only if you have filed GSTR 9. Once GSTR 9 is filed, then you can proceed with GSTR 9C. So this is a usual question. What should be the aggregate turnover calculated for the purpose of GSTR 9 and 9C to calculate turnover of 2 crores rupees or 5 crore rupees? So you have to take aggregate of all taxable supplies, all exempted supplies, all export of goods and services, including interstate supplies on same PAN basis. So even if you have multiple GST numbers in various states, the turnover for the purpose of 9 and 9C shall be calculated on PAN India basis. So if PAN India basis of all the consolidated GST numbers, if your turnover is exceeding 2 crore rupees, then it is mandatory for you to file GSTR 9, and GSTR 9 will be filed multiple times from various GST numbers you have, but you have to file GSTR 9 if aggregate turnover PAN base exceeds 2 crore rupees, and it is mandatory for you to file GSTR 9C if your turnover exceeds 5 crores, that is PAN based turnover. So what we have to exclude from this turnover? So we have to exclude all the taxes from this turnover. We have to exclude inward supplies liable to reverse charge from this turnover. We have to exclude non-GST supplies like alcohol, liquor, that is for human consumption, that should be excluded. Apart from this, you have Schedule 3, list of Schedule 3. You have to go through that Schedule 3 list, and you have to exclude that Schedule 3 articles from the for calculating aggregate turnover as per GSTR 9 and 9C. So this is applicability of 9 and 9C for financial year 23-24. So up to 2 crore, it is not applicable. It is optional. If you have some major reconciliations, then you can go for filing GSTR 9. Else it is not recommended. If your turnover exceeds 2 crore up to 5 crore, then it is mandatory to file GSTR 9, but GSTR 9C is not applicable. And if your turnover exceeds more than 5 crores, then GSTR 9 is also mandatory and GSTR 9C is also mandatory. Again, I am repeating, the turnover you have to calculate on Pan India basis, not on GST number basis. So in between, I'll try to run, live tally data to show you features and how to fetch the report from tally. So what is the maximum limit for filing GSTR 9? So GSTR 9, you have period of 3 years for filing annual return with the penalty, and government may allow you to file 9 even if the 3 years exceeds. And once 9 you have filed, you can file 9C also. So maximum period is 3 years. Within 3 years, you have to file your GSTR 9. So what is the penalty? So if you miss this due date of 31st December, then if your aggregate turnover is up to 5 crores, then 50 rupees per day is your penalty, maximum 0.4% of your annual turnover. And if your aggregate turnover is more than 5 crores, then 100 rupees per day you have penalty and maximum 0.4% of your annual turnover. And if your aggregate turnover is more than 20 crores, then 50 rupees per day and maximum 0.5% of your turnover. So this is the late fees chart. So what is the flow? How to start with filing GSTR 9 and GSTR 9C? So this is the flow. First, we have to file all the GSTR 1, 3B and relevant monthly or quarterly returns. Then we finalize the accounts. We complete with our tax audits and company audits. Then we do reconciliation and adjustments as per tax audit and company audit, which we have closed. We have to show this reconciliation in GSTR 9 or 9A, and after that we proceed with filing GSTR 9C. So this is the basic flow chart of how to go with the GSTR 9 and 9C. So this is important. So things to be kept ready for filing annual returns. So your all audited books of account should be kept ready. If not audited, complete balance sheet profit and loss account, which you have finalized while filing your income tax return, should be kept ready. Your statutory audit reports, your tax audit reports, you need to check if there is any specific comments regarding this GST in audit report or tax audit report. Then you need summary of all GSTR1 file, that is annual summary. You need summary of all 3B file during the year. You need electronic cash ledger. You need electronic credit ledger. You need monthly summary of outward supplies. You need details of all advances taken for which no invoice was issued till the end of the year. If your client is into export or supplying to SEZ, then details of LUT or bond will be needed. So this all things we need in our working paper file. Then register of credit note, debit notes we need, reconciliation of outward supply with accounts, GSTR 3B, GSTR 1. So reconciliation of sales, we need to do with accounts 3B and GSTR 1. This usually we do while, conducting the statutory audit or tax audit or filing the income tax return. Monthly summary of inward supply you will need, that is purchases or expenses. Details of inward supplies with classification of inputs, input services, and capital goods, because we have to disclose this in annual filing. Then details of all IGST paid on import of goods and imports of services. Then details of tax paid on reverse charge basis. Then what ITC summary, eligible, ineligible, or ITC if reversed during the year. Reconciliation of ITC with books with 3B, 2A, 2B. Then details of taxes paid through cash ledgers along with late fees or penalty if any. And very important, transaction of financial year 22-23 declared in financial year 23-24, that we have to include in our reconciliation. And financial year 23-24 transactions declared in next year, that is 24-25. So last date for filing this amendments or transacting in the returns for financial year 23-24 was 30th November. So any reconciliation done by your client for financial year 23-24 to be checked in next preceding financial year, that is 24-25 up to 30th November 2024. So these all documents you need to keep ready when you are filing your annual return for GST. So basically, what is the purpose of GSTR 9 and GSTR 9C? So the basic purpose of GSTR 9 and 9C is reconciling or matching. So what you need to match while filing GSTR 9 and 9C? First, outward, and second, inward. So turnover, you have to reconcile your 3B, your books, and your GSTR 1. If there are any differences, you need to report in GSTR 9 and correct the returns. Apart from this, inwards, that is ITC. So ITC, you need to do matching between GSTR 3B, books 2A and 2B. And there is one more table, GSTR 8A, which is fetched through GSTR 2B in annual return. You need to download that and verify that as well. So in various seminars, I have, came through all these questions. So certain questions I'll try to discuss here. So what are the key issues in annual return? So many times I, get these questions. Is it mandatory to file GSTR 1 and 3B before 9? Yes, obviously it is mandatory to file 1 and 3B, without which you won't be able to file your GSTR 9. Is it mandatory to file 9 and 9A? Yes, if the registered taxpayer has paid tax under composition for some period and normal provision for some period, then it is mandatory. So, a practical scenario where during the year a client was under composition scheme and then opted for normal scheme, or under as a normal taxpayer and then subsequently converted to composition taxpayer, then he have to file both GSTR 9 and GSTR 9A. It is mandatory. So is it mandatory to file 9, 9A and 9C? Yes, if the registered taxpayer has paid tax under composition and normal provision as well. And if the turnover exceeds 5 crore, yes, then it is mandatory to file 9, 9A as well as 9C. So what if registration is cancelled during the year? So even if registration is cancelled during the year, the annual return needs to be filed by the taxpayer if the turnover exceeds the basic limit, that is 2 crores and 5 crores. So what if registration is taken between or during the financial year? Then also, yes, the annual returns need to be filed even if the taxpayer has taken registration for any period during the said financial year if your turnover exceeds 2 crores. Another question which I usually get is whether to be filed on entity level or GSTIN level. So Form 9 is to be filed at GSTIN level, that is separate form for each registration. So yes, while calculating the limit of 2 crores and 5 crores, the turnover needs to be considered on PAN basis. So if you are crossing your turnover limit of 2 crore or 5 crore, then for every GSTR number, you have to file your GSTR 9 and GSTR 9C. It is mandatory. Will consolidated summary of 1 and 3B be made available for filing the return during financial year? So answer for this is yes. Consolidated summary of 1 and 3B is available on portal and you can download on in PDF format for easy reconciliation. And what happens if compute liability button is clicked? So compute liability button you have clicked, you have submitted your 9 and your GSTR 9 is ready to file. So after, clicking to this computed liabilities button, you have no option to change the figures you have added in the portal. So be very careful while, computing your liability. In Form 9, can additional liability not reported earlier in 3B be declared? Yes, if you have reconciliation and as per reconciliation, you have to pay more taxes, then you have to declare that taxes in GSTR 9 and you have to make the payments to GST DRC 03. Is there any option to make payment if applicable in Form 9? Yes, you have to pay and you have to pay through DRC 03 through electronic cash ledger. Can we claim or report any unclaimed ITC through annual return? Very important. No, we cannot claim any unclaimed ITC through GSTR 9. It is not allowed. You only have time up to 30th November 2024 to show your ITC. Or if up to 30th November you have not claimed your ITC, then your ITC will go under lapse. Can we revise GSTR 9 after filing? No, we have no option to revise GSTR 9 after filing. So if we go through the tables of GSTR 9, this is the basic thing which we are asked to put in the details. So first, your company's basic information. Then in table number 4 and table number 5, you have to disclose all your details regarding outwards, that is your turnover and GST liabilities. Then in table number 6 to 8, you need to give reconciliation of all the ITCs. Then table number 9, calculation of liability. Table number 10 to 13, any carry forwards or rectifications you have to do in that return, that needs to be checked. And 15 to 19, other details, that is refund details, your HSN inward, outward details, etc. So this is the basic tables which we usually see while filing GSTR 9. Now comes to an important slide. How to fetch these details from Tally. So in table number 4, you need all the details pertaining to your output. So I'll run through some of the Tally features from where you get the details. So this is dummy Tally data just to show you the reconciliations. So how to fetch the details? So if you're on dashboard of Tally, then you have to go to display more reports. Under display more reports, statutory reports. Statutory reports, you get various reports pertaining to GST, TDS, TCS, MSME. So we'll just go through the GST reports. So this is entire GST reports. This is annual computation, GSTR 1 reconciliation, 2A reconciliation, 2B reconciliation. Challan reconciliation. We have some good utilities to check. We can see reverse charge reports. So how to fetch this sales report? So you have two, three options to fetch this sales report. That is, first, either you go through GSTR1 report, annual view. Either you can go through a sale register and columnar to check B2B, B2C breakups. And either you can go through this GST annual computation. So entire details which is required in GSTR 9, everything in the format, we'll fetch it from here. But the only drawback is we cannot upload, GSTR 9 and 9C directly through Tally as we can do for GSTR 1 and 3B. That is not possible. That feature is still not activated. So this is GSTR 1. So this is GSTR1 report. You can change the period and you can put your annual information here. So in this tally, we have various registration, multiple registration for Karnataka, Maharashtra, and Tamil Nadu. So for all the registration, you can fetch your separate report. This is only for Maharashtra registration. Similarly, you get for Karnataka registration and Tamil Nadu registrations. So you can see consolidated view. You can see view based on your GST number as well. So entire details which we require for 9, we get it through here. So we'll open GSTR 9 utility just for your reference. So we can, cross check with the tally what reports we can get it through here. I don't know what's wrong with my folder. So this is basic latest utility which I have downloaded from GST portal itself. Till the file gets open, we'll see this. So you can see in summary format, entire year's GSTR1, or you can see it in return format. So all these details we need in GST return, B2C details, gross sale, then B2C details, debit note, credit note details, B2C small invoices, any amendment filed during the year, liability, including your HSN summaries, annual HSN summary you can get through here only. Yeah. So this is our GSTR 9 utility. So as you can see, table 4. So table 4, you have to file all outward details. You need B2C details, B2B details, zero rated, deemed exports, credit notes, debit notes, any amendments declared during the specified period, any advances. So all the details you can fetch it through here. This is annual view of GSTR 1. The only thing you have to keep in mind is ask the accountants to clear this uncertain transactions. If this uncertain transactions is reflecting here, the transaction might not reflect in your return period. So, while checking any report of tally pertaining to GST, you need to check all these uncertain transactions first. You can open your GST portal directly from here itself. You can see exception reports also. Exception reports are reports, जो transactions, they have accepted manually there was some error, but transaction was accepted manually. So this was the transaction accepted as it is. So GST rate details are overridden in the transaction. So your GST rates were overridden. So you can see voucher through this file itself. So always check this exception report also. So, to clear this uncertain transaction, they may accept the transactions as it is. So first is this way. Second is annual computation way. So this is annual computation way. This also you can, check on GST number basis and consolidated as well. So this is details of entire output and input summary. If we check in detail, this is detailed report. So this is entirely your report 9 format. So we have B2B, B2C credit notes. This is B2B supplier along with their credit debit notes. You get export details here. You get SEZ details here. You get deemed export details here along with their debit note, credit note. SEZ supplies along with their debit note, credit note. So entire detail which is relevant for table 4 and 5, you can get it here along with total tax liability. But only thing you need to re-verify is this uncertain transaction. Please check this uncertain transaction and then you can fetch correct report out of it. So if you can see entire output details, we can find in annual computation. So if you are not comfortable to use this as well, what we can do is display, account book, and sale register. So I'll go through sale register. This is the shorter way. If you don't want to go through, complicated transactions of 9 and annual computation, and you have to do this columnar. Columnar, whatever details you need, you say yes to the details. I need all the GST numbers, PAN numbers, import export details if any, quantity details if you need, endless, and accept. So this is another report, annual report pertaining to sale. So through this, you can, filter B2B transactions, B2C transactions. So all the sale report along with GST number you can see here, along with all the taxes, output and input liability. So this is one of the way if you want to check sales register and fetch input output liability. So you can apply filter here as well through GST number, or you can take the sheet in Excel and apply filter about B2B and B2C transactions. So this is also easier way to fetch the report. So there are 3 ways to fetch the report for sale. One is annual view of GST R1. Then if you can go through sale register, this is the shorter way, and either you have to go through GST annual computations. So as we said, we get all the details which is required for 9 through this report. All the names are also, I think, same. Including this zero rated, we could fetch from there itself, debit notes, credit notes, and total turnover. So this take care of everything. Again, I will go to statutory reports, GST reports. I'll go to GST utilities. So this is GST rate setup file. So if you want to check stock item wise, what are the HSN use and what are the rates? This is the normal report you get it through Tally. So in this, you'll get all the stock items rate wise and HSN wise. So this is the report. You want to see stock group wise, you can see stock group wise also. Now, this is very important thing which we can check. Validate party GSTIN. So if you want to check any debtors or creditors having GST number. So this is list of all the debtors and their respective GST number. So this is also one way to check B2B and B2C debtors, list of debtors. This is consolidated thing. So if you want to check this Electro Private Limited, Tamil Nadu, does this have GST number or not? So you can use this feature, fetch details from GST. So now I have not done any logins, but if you have saved your details in your tally, then if you say yes, then GST portal will fetch the details for this party. So this way you can check. So if you validate, you can validate for all your debtors or creditor list. So if any details which the client's accountant has, wrongly added here, it would be easier for us to re-verify. So this also show the information pertaining to if anybody's GST number has been cancelled or GST number has been suspended, then that details also we can fetch it through portal. So this is an important report. So we can create also party using GST number. What you need to do, you just need to add GST number and import GST through portal. So once you put GST number here, all the details pertaining to that GST number will be added in the tally. So this is good feature which Tally has given us. But for the purpose of 9 and 9C, we can check through this validate party GSTIN. So we'll be able to understand what party's GST number is suspended or suo moto cancelled or party have voluntarily cancelled. That we'll be able to check through this. Moving forward. So this was about table 4. So table 5 also, same way you can check either GSTR1 report annual view or through sale register or through GST annual computation. So this is important. What are the relaxations given for financial year 23-24 in GSTR 9? So in table number 4, all the items are mandatory. In table number 5, to either separately report credit note, debit note and amendment in 5H and 5K, or fill table 5A to table 5F net of credit note, debit notes. So for this year also we have option to separately show amendments or debit note, credit note, or what we can do, we can show net of debit note, credit note in turnover formats. Then table 5, the registered person shall report non-GST supplies separately and shall have option to either separately report if supply is exempted or nil or report consolidated information. So in table number 5, also you have option, to if you don't know the transaction needs to be reported in non-GST or transaction need to be reported in exempted. So you can consolidate under one head and show as exempted. So disclosure of outward supply. So outward supply, applying the same rule of outward supply for financial year 23-24, following needs to be disclosed. So outward supplies and liabilities for 23-24 as per books of accounts you have to disclose in 9. Then outward supplies and liability disclosed in 3B of financial year 23-24 of same year shown in same 3B, you have to report in table 4 and table 5. Okay. And any outward supply or liability disclosed in 3B for financial year 23-24, but you have reported in next financial year up to 30th November 24, then you have to report that in table 10 and table 11. So this is table 10 and table 11. If we go through the utility again, I don't know why utility, I think there's some error while operating this utility. So this is table number 10. So any transactions, which you have reported up to 30th November, you have to show in table number 10 and 11 of GSTR 9. Then any outward supply and liability not reported in financial year 23-24, even up to 30th November, then you have to disclose it in table number 4 and 5 itself. When you disclose this in table number 4 and 5, then your liability will be created, and your liability you need to pay it through DRC 03. So this is very important, where to show correctly what figure. So, 23-24 transactions which you have reported in same years 3B, 4 and 5, you have not reported at all up to 30th November also, it is part of reconciliation. You can report it in 4 and 5. And any transaction which you have reported up to 30th November, then you have to show in table 10 and table 11. So this is about ITC. So ITC also you have option to view, get or fetch the reports in three different manners. So what details you need for filing GSTR 9? You need domestic ITC, and in bifurcation input goods, capital goods and input services. You need import details in same bifurcation, input goods, capital goods and services, and RCM you need to show. So basically you need these three details for ITC, that is domestic ITC, import and RCM. So from where we can fetch the details, we have three options. I'll run through the tally. So as you get report of GSTR 1 annual report, you get GSTR 3B and annual report as well. So this is GSTR 3 annual report. You can change the period. So if you can see, there are uncertain transactions here. So first you have to clear all the uncertain transactions. So if we just go through certain transactions, so in this transaction, bill of entry number is incorrect or not given. So you need to check and put the details to clear this transaction. Mismatch between expected taxes and modified taxes. So your IGST amount is wrong here. So once you correct that, it will be sorted. So this is also not correct tax. This has been manually changed. So go through the uncertain transaction. First clear the uncertain transactions, and then you can get proper report. So this is entire 3B in detailed format. So you get all the details pertaining to outward here, including all the details pertaining to inward. So this is all the details pertaining to import ITC, that is import of goods, inward supplies for RCM, all other ITC. So if you have bifurcated this between, input goods and capital goods properly, then you will be able to get that details, or you have to find it manually. So this is all the details which you need while filing your 9, any details pertaining to ITC. Another option you have, this is annual computation option. So annual computation option also, you get all the details pertaining to ITC. This is all the details pertaining to ITC. This is import of goods. This is import of goods input. This is classified under capital goods, SEZ, input of services. Look, entire details which is needed for GSTR 9, it reflects here. This is all other ITC classified under input, capital goods, input services. So this is a really useful report. We have option to verify details to here itself. So this is the monthly details. If you want to go through this table, you get entire details of input. This is very consolidated and very accurate report, provided the tally entries has been done accurately. So through the same report, you can check everything. And if you don't want to go through this tedious process, then you can go through the purchase register and expense register. You can fetch the details. So this was all about table 6. So entire table 4, 5, table 6, you can fetch it through Tally. So what are the relaxations? So in financial year 23-24 also, you have option to either classify, it is mandatory to classify under capital goods, but you have option to classify it under input or input services. If you don't have classification of input services, you can add it in under input head itself. And apart from this, table 7, you have to mandatorily file all the details. So this is amendment and reversal. If there is any specific amendments or reversal under Tally, you don't get any specific report pertaining to amendment. So basically, if you have filed, any details of amendment through Tally, you have uploaded through Tally, then you may get the report, but you don't get any accurate report for amendments or reversal through Tally. So this we have to find out manually. So what are the relaxations? So this is about table 12 and table 13. So for financial year 23-24, aggregate value of reversal of ITC, which was availed in previous financial year, but reversed in returns filed during the year from, April to October, that is up to 30th November, shall be disclosed in table 12. The register taxpayer have option not to file this detail. So any reversal details, you have option to file it in table 12, or it is up to you. If you don't want to show, it is optional for this current year also. So table 13 is also optional. The ITC of goods or services received in previous financial year but availed in April 24 to October 24, that is up to 30th November. You have to show the details in table 13. But what is my recommendation if there is a adjustment, if there is that sort of ITC of financial year 23-24, which you have reported next year, it is recommended to show in table 13, but it is optional as per law. Even if you don't want to show, you can include it in table number 6, 7 also. So this relaxation has been given for financial year 23-24 as well. Then about refund, then you have done with, output and input reconciliations and everything. Then you have in table number 15, you have details of refund, what refund has been claimed, sanctioned, rejected or pending during the year 23-24. So table 15A, 15B, 15C, 15D. Then in table number 16, you have to show your turnover as per composition, inputs as per composition, job work or approval basis. So this also you can fetch it through Tally. So that is serial number 5 of annual view of GSTR 3B. You'll be able to get all these details which needs to be filled in table 16. Now very important, HSN and SSC code. So for input and output, both you can fetch it through Tally. So we have seen all the reports of, GSTR1. So outwards, you can fetch it through GSTR1 also, or you can go through, annual computation. You will be able to get both the details of inward HSN and outward HSN both. So this is again important. ITC of financial year 22-23 included in 23-24. So if you have a transactions wherein ITC of 22-23 you have disclosed in 23-24 3B, then how to take care of it. So input credit is treated as claimed in period when it is entered in 3B and credited to electronic credit ledger. So in whatever year you show it in 3B, that will be considered for that financial year in as per GSTR 3B. Input tax credit missed out while filing 3B returns for 23-24 can be claimed in return up to October 23, that is up to 30th November. And such input tax credit is disclosed in table 12 and 13 for annual year 22-23. So if you are showing any return of 22-23 in 23-24 and you have to go back and check the GSTR 9 of previous year, that is 22-23, and you check if table 12 and 13 show any details. If it is showing any details, then the ITC will be carry forwarded to next year. Where the ITC is not reported even during the extended period, then that ITC will be considered lapse. So very important, input tax credit pertaining to 22-23 claimed in 23-24 will be treated as ITC claim of for the period in which it is disclosed in 3B. Accordingly, will be shown in GSTR 9 of 23-24. So while filing GSTR 9 of 23-24, you need to check if any credit was carry forwarded from 22-23 to 23-24, then you have to consider that figures while filing GSTR 9. So this is important. What are the relaxations? So table 15 pertaining to refunds and demand, it is optional. Table 16, it is optional to show the details pertaining to composite deemed supply or goods sent on approval basis. It is optional. Table number 17, which is pertaining to HSN summary of output supply, it is mandatory. And table 18, HSNY summary of inward supply, that is still kept optional. So this is also very important. Disclosure of ITC of 23-24. So what disclosures needs to be done? So we have seen this case. If ITC of financial year 22-23 reported in GST or 3B during exceeding extended period up to 30th November. So where to show this details? You have to show this and disclose this in table number 6 and 7 of GSTR 9 of current year, that is 23-24. So you have to go back again and check GSTR 9 of 22-23 for fetching these details. Another ITC of 23-24 disclosed in 3B up to March 24. You have accurately shown all the ITC in current year 3B for current financial year. Then you have to disclose it in table number 6 and 7 of GSTR 9 of current financial year. This is important. ITC of financial year 23-24 reported in 3B during extended period, that is up to 30th November 2024, then you have to disclose in table 12 and table 13 of GSTR 9. Now, disclosure in table 12 and 13 is kept optional for financial year 23-24, but I recommend you to disclose this detail correctly, because when you get auto notices from GST department for reconciliation, it is easier to prove the carry forwards if you have disclosed in table 12 and table 13 of GSTR 9. So if you are considering this as optional, then you have to show that also in GSTR 6 and 7. But if possible, if it is reconcilable, then it is recommended to show in table 12 and table 13. And ITC of financial year 23-24 not at all disclosed in GSTR 3B, not during the year, not even in extended period, then that ITC will be considered as lapsed. So you cannot use that ITC or you cannot carry forward it to next financial year. So this is very important. Similarly, as we have seen the disclosures for outward supply, that is outward liability, this disclosure of ITC also needs to be very accurate. So cross verification, all the details you have added in GSTR 9, certain details will be auto fetched in GSTR 9C as well. So once 9 is filed, the automated figure will reflect in GSTR 9C regarding your turnover, that is outward liability, regarding your ITCs, and you have to show reconciliation in GSTR 9. So what reports you need to check while filing GSTR 9 and 9C? One important report we have seen today is annual computation of GST. Then you have option to see GSTR 1 for entire financial year. You have profit and loss account, balance sheets of entire financial year. You have purchase and sale register showing columnar view. So you can, bifurcate details between B2B, B2C. You have CGST, SGST, IGST, both output and input in annual view tab. You have all the 3B reports in annual view tab. You can as well mark the vouchers that you have verified. You can even save the vouchers, and you can always use this go-to feature, which is very, you don't need to go here and there to find this detail. if you just go in Tally and use this go to feature and you put annual computation here. So this annual computation, you will be able to run through here also. So this is very good report. Apart from this, I'm not doing any reconciliation part today because we need at least 1 or 2 hours to complete this reconciliation. But I'll show you if you want to check party to party reconciliation along with your GSTR1, then you have option to import all the files from GST portal. You have you can import the ledgers through GST portal. Once your JSON has been downloaded, you can import it here and all the party to party details will be reconciled. So you have option for GSTR1 as well. You have reconciliation option for GSTR2A as well. And you have reconciliation option for GSTR2B as well. So just for understanding purpose, I could, download JSON for GSTR2B reconciliation here. So if you want to see detailed reconciliation, this is the detailed report. So this is party to party reconciliation with the portal. I need to see this voucher wise reconciliation. So this is voucher wise reconciliation. So you get the bifurcation of mismatched vouchers. So this is 45,000 and 4050 as per Tally. The bill number which I have added is 76, but at portal, the bill number is something different, but amounts are same. So this you have got under query. So you can, anytime correct the voucher number. Similarly, amounts are same, bill number are different in this party. Then available only in books. This Rahul store is available only in books and it could not be found on portal. But you have to check this if amounts are same, but there might be reconciliation due to bill number. If you can see, bill number is different. Here your voucher number is different. Then this Meghna Enterprises. Meghna Enterprises is available only on portal and it is not available on books. So GST portal view, you have this GST portal view of a specific transaction. So you need to check with clients that either they have not accepted the bill or they have skipped passing the entry for this bill number. So this is the reconciliation. You can sort this reconciliation through here also. And you can set the effective date of your reconciliation. So your back entries are, undisturbed in that particular ledger. So even GSTR1 you can check this way, even GSTR2A you can check this way, and even GSTR2B you can check this way, party to party. So there are option of certain smart configurations as well. If you want to filter out, suppose somewhere in transactions, GST portal is showing 0076 invoice number, and in our Tally it is just 76 number. So you can cut short that through some particular settings. So your reconciliation report will be filtered more. So GST, it works this way. Entire uh, reconciliation you will be able to see reconciled vouchers, everything. So for this, what you have to do, you just have to download the JSON, import that JSON in Tally, and Tally will auto reconcile. So we do it on monthly regular basis for our clients while filing GSTR1 and GSTR3B. And if you are not doing that, you have option to do it on annual basis as well. So here you can find a summary as well that available in books. Two invoices are available in books and not in portal. Available only on portal. and mismatch summary, unreconciled summary. Everything you will be able to find it here itself. So you can run through various reconciliation through this related report as well. And you have option to see this on company level or consolidated or GST level. So I request you to go through all these tabs which is available in GST reports. So certain features are available only in upgraded, versions of Tally. So I request you to upgrade your Tally version to get all the features of GST reconciliations. So this is also very important. This is for tracking your GST returns activity. So is your GST returns filed, pending to be filed month-wise? You'll be able to see for various registrations, you'll be able to see. If you want to see return-wise, you can check return-wise. I only need to see for Maharashtra. This is for Maharashtra. So this was quarterly filed. So this is how you can track your GST activities through Tally. Apart from this, you have option of challan reconciliation as well. So you need to download all the details here and it will reconcile automatically. You get RCM details here as well. If you have, marked the transaction as RCM. Here it is not marked. Certain things are marked and certain are not marked. So this is liability for reverse charge. And this is the detail. So if you are marking under, reverse charge, then you'll be able to get all the RCM details through here itself. GST utility also I have shown. You can always use this feature of, validate parties GSTIN to go through if any party GST number is cancelled or surrendered or suspended. And this is also really good. It gives you a complete view of all the stocks along with GST rates and HSN codes. So if you feel if rate is not matching with the HSN code, you can check through this consolidated report. You have option to update GST details through portal itself. If you put your HSN details, then it will fetch the details automatically from the portal. You can see GST rate history also. If there is any change in rate during the year, if your goods was under 18% and then converted to 12% or 12 to 5% or 5 to 12% whatsoever, then you can see the history of changes here. So this is also very effective return, very effective details. You can, see HSN wise report or you can see, detailed report. You have option to change the parent group. You have options to amend masters also through here. You can even remove GST details, upload GST details. So this is really effective report which we can fetch through Tally. And apart from this, if you have any technical doubt, you can, ping me on mail so we can discuss any specific queries if you have. Thank you. Yeah, so do we have any specific queries?
Thank you so much, CA Tharya Gandhi ma'am, for your knowledgeable session. There are a few questions from
Okay.
participants. I'll take one
Okay.
of one.
Okay.
First is that um, RCM on vehicle hire charges paid at 12%. Can
Hmm.
RTC be claimed on this RCM?
So basically, any technical questions, not matlab industry specific questions, you can anytime put on mail so we can discuss. So if there are any general queries, we can take it up right now.
Okay. And further question from Megha. Where can
Okay.
we show the RTC belonging to financial year 22-23, claimed in financial year 23-24 in point 6P or 6N of GSTR 9?
So this is the table. I could, uh, get it on one page. You can take screenshot of this table if you want. So any
I'm
details of
audible?
23, yeah, you are audible. Am I audible?
Yes, yes.
Yeah. So any details, pertaining to this, you can show it in table 6 or 7, depending upon, the relevance of the ITC.
Okay,
So 22, 23, you have to show in table 6 and 7.
okay. And one more question from Preeti Jain. What is to be
Yeah.
done when ITC is claimed more in GSTR 3B compared to GSTR 2B?
So if you have claimed more in 3B compared to GSTR 2B, you need to check party wise that
2B.
what is the reconciliation party wise, month wise. And if the transaction is not reflecting in 2B, then you are not supposed to claim it in, GSTR 9. So you have to pay that through GSTR DRC 03. So if it is not reflecting in your 8A or 2A, 2B table.
Okay. Further question is outward supplies not reported and tax paid through TRC 03. Do we need to disclose under taxes paid in table 9?
So yes, you have to show, no, you have to show actual
No.
in table 9 as a liability. Just a minute. Let me, open this table for your reference. Can you repeat the question because your voice was
Yeah.
breaking in between?
Outward
Can
supplies
you
not reported and tax paid through TRC
outwards?
03.
Okay, okay.
Do we need to disclose under taxes paid in table 9?
So basically, you are asking about this transaction, that is, any outward supplies for which tax was needed to be paid was not
Yes.
reported during
Yes.
financial year 23-24 and not even up to 30th November. Then you have to show the correct turnover in table 4 and 5. You have to show consolidated liability in table 9 and you have to generate the liability. Unless you show the total
Okay.
figure, you cannot generate the liability. So once liability is generated through outward liability, then you have to pay it through DRC 03.
Okay, ma'am. These are the questions I had to. And further, your session is more valuable and knowledgeable to us. And it is both an honor and privilege to deliver the vote of thanks at the conclusions of today's sessions. I would like to our sincere gratitude to all who have made this session a success. First and foremost, I would like to extend our heartfelt thanks to our esteemed speaker, C.A. Dhara Gandhi, for making the time to share their valuable knowledge and insights with us. A special thanks to all our audience for your participation, questions, and attentions. Thank you so much, Dhara Gandhi ma'am.
Thank you.
And
Thank you.
I'm further hand over sections to the Pooja Sharma. Please take a charge, ma'am. Thank you.
Yeah, thank you so much.
Hello,
Yes,
hello,
ma'am.
am I audible?
Yes, ma'am. It's your turn. Please go ahead, ma'am. Pooja, ma'am. Please go ahead.
Yeah. I would like to introduce CA Priya Rathi. Should I continue? Hello, am I audible?
Pooja, ma'am, you are audible, ma'am.
Priya Rathi, a chartered accountant specializes in auditing and data taxation.
assisting businesses in complying with the financial regulation. As an ICI Private concierge, she has guided over 500 students and served as a facility for ICI orientation and thesis programs. She writes on practical taxation and auditing scenarios across various clients.
Thank you, ma'am, for introducing me. A very warm evening to all the listeners. I would like to thank every fraternity members for joining us today. Thank you for your valuable time and support. Not many years have been passed that I've become CA, but the journey has been very encouraging and motivating. I would also like to thank CA Institute for introducing Yashaswini series where we can come up and share our knowledge and gain some knowledge. Without much delay, I would like to start my session on the topic Building Financial Statements, a Key to Management's Decision. I would like to brief about my topic today. Financial statements. As we all know, financial statements refers to balance sheets, P&L, profit and loss accounts, and cash flow statements basically. So why are they needed in the era of business, and what is the importance of financial management? What are the objectives of financial management, and how to make financial statements? What is the source of data to make financial statements? Financial management is one of the most important aspects since the idea has been originated till the result of that idea. Financial management is the important aspect, whether to run a business or to start a business. And in the intermediate level also, we need to see our financial statements. To start up or even run a successful business, you will need excellent knowledge of financial management. Financial management not only refers to balance sheets and P&Ls, but it is more about planning, making up project reports, how to introduce capital, how to allocate capital, that is the planning part, and then organizing such capital and directing and controlling of financial undertakings in an organization. Financial management has various components. Financial planning, this is the process where we start calculating the capital which we will require to diversify or to expand our business. To an organization, it is the basic step. The first step which a company takes is to make a project report. We get all the quotations, and when we suppose we are getting quotations for furniture, land, building, machineries, we will sum up all the values and we will reach to an amount. That is what the amount which we will require to introduce in the business, to expand it or to diversify it. So that is the capital required, which we will be needing that amount to start or to run the business. And then comes the capital structure. We have reached to an X amount, and now how we are going to fetch that amount? Either secured loans, unsecured loans, and then comes our own capital. So there are few ways to fetch the capital. That is either from the financial institutions, banks, public deposits, shareholders funds in case of companies, equity, preference shares, and then our own capital. In case of sole proprietor comes with his own capital. And in case of partnership firms, it is the capital of the partners which is introduced in the business. What are the financial policies and regulations? There are some boundaries which company sets to, that these are the set rules beyond which a company will not go. These are the set boundaries, like banks introduce drawing powers. Similarly, company or an organization makes their own financial policies and regulations. There are people assigned financial executive, financial managers who will look over to this process. Financial control. This is one of the key activities in the financial management. Once you will procure funds, once you will allocate the funds, but who is going to monitor that fund? Its the main role is to assess whether an organization is meeting its objectives, for what the capital was acquired. Is it allocated to achieve the goal of the organization? Financial control answered the following questions. Are the organization's assets being used competently? Are the organization's assets secure? Is management acting in the best financial interest of the organization and the key stakeholders? Now, who are the key stakeholders? Key stakeholders are the lenders who have lended money to your organization. Say, for example, bankers, financial institutions, and the people who have infused in capital to your organization via unsecured loans. And then the shareholders, creditors, these all are the stakeholders who has interest in your financials indirectly or directly. Financial decision making. This involves investment and financing with regard to the organization. This department makes decision about how the organization should raise finances, as we have already discussed, that what are the sources of funds and what is the allocation of funds, that we all have studied about, that there are certain sources of funds and then how to allocate such funds. The financial management department of any firm is handled by a financial manager. So there are numerous functions, there are numerous components which are involved in this decision. First, while we make any project report, we will gather all the quotations. We'll see what are the values of various assets we need to expand our business or to diversify. Then we will reach to a number. And then we are going to see what is the type of the entity. If it's a company, if it's a partnership firm, and then if they are willing to take up some loan, then what are the process for that loan, and how much they can get from the loan process, and how much they have the capacity to infuse in their own capital. So this is the capital requirement, allocation of funds, and capital structure we'll be uh, dropping into the project reports. Why is financial management important? This form of management is important for various reasons. Why we often get a question that why such numbers are important. We'll keep on running the business and we are not focusing on balance sheets, P&L, numbers, profits or losses. Then what is the importance of finances? So it helps the organization in financial planning. I mean, everybody is interested in profits. Though even an organization might not make profit in few years, but it should make profit. You should see to the numbers also, and how to pivot that loss making organization into a profit making organization. That is all the game of numbers. So helps the organization in financial planning. That is the role of financial managers. Assists organization in the planning and acquisition of funds and then utilize that fund optimally. Helps organization in effectively utilizing and allocating the funds. And the funds procured are not wasted. We are not paying interest unnecessarily on the funds procured. Assist organization in making critical financial decisions. Critical financial decisions, sometimes market conditions are not favorable, like recession or something other unfavorable event or adverse events happened, due to which our business is affected. So those are the areas where we need to make some crucial decisions, and how, on the basis of our financial statements, we can make some financial decisions. That is the importance of financial management. Then other events like merger, acquisition, amalgamation, or to discontinue any segment, any loss-making unit or a product. How we will get to know if a product is, loss-making? We will get an inventory management done. We will chalk out all the stocks. We will see stock wise what stock is making how much product, how much profit, and what is the slow moving product, how those inventories are managed. Then we'll analyze, okay, this product is not making much profit, we can discontinue. And similarly, if a segment in a business is loss making, we can discontinue or we can put on hold for some time that particular segment. So how we are going to conclude about it all? From financial statements, helps in improving the profitability of organization, increases the overall value of firms or organization. This is wealth maximization basically. So shareholders, they are interested in their stake. So ultimately, if a company is making profits and they are getting dividends, so their wealth will maximize. And indirectly, if a company is growing, if an organization is growing, if it's making profit, it will ultimately contribute to the economy of India as well. So that is wealth maximization. Every stakeholder, every employee, every person, and then till the economy, our wealth is maximized, provides economic stability so that we can surpass the unfavorable events also. If we keep a check on financial statements, if we regularly analyze the financial statements, then we can surpass the adverse situations which we often face in a business. Encourages employees to save money, which helps them in personal financial planning. Significance of analysis of financial statements. See, now we have come far away from just balance sheets and P&L. We also have interim financial statements, annual reports, budgets, projections, and other related small transactory statements. A financial statement is the annual report. In India, we prepare annual financial statements by the end of March, and the date is 31st March of every year. So a company, any entity, be it a company, a firm, sole proprietors, they will complete their financial statements by the end of March. This analysis has great significance in determining the complete records of budgets, projects, and other transactions related to finance. With all this information, we can determine the profitability of the entity. Even if it's losses, we will get to know what is our company's performance by the end of the year. The main objective of these statements shall be to review the company's performance over the past year. This review helps in the decision of investing in the company. See, if a shareholder is seeking to invest in so and so company, what he will look upon? He will look upon the financial statements. He will look upon the value of the shares. And value of the shares depends upon how a company has performed in the past years. So a stakeholder will see if we want to invest in there, if it's a profit making company, or bankers will see if we can lend some amount to them. This review helps in the decision of investing in the company. The financial statements are of great significance to the finance manager and top management. They will realize that their business has effectively and efficiently run over the past year. These statements help analyze and evaluate the company's operational efficiency and managerial effectiveness and understand the firm's best use of available resources. Objectives of financial statements analysis. To review the company's performance over the past year, this is the objective. Why we prepare financial statements? This is the objective, to know the performance of the company, to know the status of the company, and basis which we will prepare a trajectory report. That is to predict the future profitability, if we can diversify the business, if we can expand the business, or what are the new avenues open for the business in the future. The analysis of these statements helps the bankers, authorities to decide on giving the loan to the company by determining the credit risk. So you might have heard about Anita Dongre. She is the leading designing company in women apparels. And she had faced some serious concern during the time of COVID. She also leads the retail market in the brand names and global desi. She was facing a severe competition by retail brands like Zara and H&M. So this was the rising competition. She had rented good flagship stores in premium malls, which would increase her overhead expenses, that is the operational cost, which was increased. And there was inventory mismanagement issues. There was overproduction, lot of inventories was wasted, and then she had to put in all the discount and offers. She would sell off her clothes at huge discounts that used to cut off the margins. So challenges leading to losses in her company was rising competition, that is the peer brands which were there in market. Operational cost. This is from financial statements. We can see that she was paying high rental for her flagship stores, which she eventually cut down. How she introduced her clothing at e-commerce platforms like Mintra and Agio. She also has a website where she has started selling her products. So that reduced her rental cost. From where we got to know that she is paying high rentals? From the financial statements, from the profit and loss account. So she analyzed that she is paying high rentals. She would cut off the rental cost by pivoting it to online stores. Now, inventory management issues were there in her company. So she started analyzing that what product is needed at what time, because it's a very dynamic field. I mean, every year trends changes. So she implemented better inventory management practices so that overproduction could be cut down, hence lesser discounts and more profits. So this was the financial discipline that she introduced. That was the cost management, digital transformation, product diversification, casual wear focus. That is the and global desi brand, which she focused on more. Optimizing inventory and supply chain, just in time inventory. This helped reduce unsold stock and the need for heavy discounting. Sources of financial data. Sources of financial data, firstly, is the transactions which we incur on daily basis. That is the primary source of financial data. Annual reports of companies, interim financial statements. Now, few companies are bound to have internal audits conducted, but there are companies, firms, sole proprietors who conduct it voluntarily to analyze their internal controls and what is the position of their financial statements, maybe quarterly, half yearly, or in some period. Notes to accounts, this is the elaborate state accounts, statements basically of the financial statements, that is your P&L and balance sheet. A statement of cash flows. Cash flows are not mandatory for everyone to prepare, but cash flows are the real picture of how your company has performed, how your organization has performed. So I would recommend to prepare a cash flow to understand that what segment has earned what. So cash flow is basically cash and cash equivalents. Here bank accounts are also included. Business periodicals, credit and investment advisory services. Companies prepare. In India, we follow GAAP, that is generally accepted accounting principles. Our accounting standards. Those are the basis upon which we prepare our financial statements. Further, every financial statement contains an overall representation in addition to various specific assertions. Now, these assertions we will discuss later for financial statements, that is income statement and point statement. Each financial statement purports to present something as a whole in addition to its component details. For example, income statement purports to present the result of operation, that is a profit and loss account, and balance sheet purports to present financial position, that is our what is the position annually of the organization. In preparing financial statement, companies management makes various implicit and explicit claims. This is what we call assertions while auditing. So that is completeness, cutoff, existence, valuation, right and obligation, presentation. I would like to take one example while explaining these assertions in income statement, that is employee benefit expenses. Employee benefit expenses comes in P&L, profit and loss account. It is under the expenses. So occurrence, employee benefit expenses have been incurred in that organization in that financial year. So that is the occurrence assertion. That means those expenses have been incurred. That is occurrence. Completeness, that the all the components pertaining to employee benefit expenses have been fully accounted for, like staff welfare, and there are many components in the basic salary, dearness allowance. All those components have been fully accounted for that year. Cutoff means only the expenses pertaining to that current year are accounted for, and not any expenses which pertains to previous year or the next year. Measurement, now there are few calculations we have to make, like for PF, provident funds, ESIC, and gratuity, ESOPs. These are the calculations which we require to measure, which we require to calculate. Presentation and disclosures. What is the presentation? It comes in the P&L, and if there is any component which we need to disclose, then we have to disclose it in the notes to accounts. Balance sheet captions comprising assets, liabilities, and equity balances. Existence, similarly, that some plant and machinery exists in the organization. That is existence. Completeness, it is basically fully accounting of that asset or liability. Cutoff, pertaining to that particular year. Valuation, there are several methods which a company can adopt, which an organization can adopt. That is valuation, like inventory. Inventory, there are various, if we have to value it on cost, or what is the method we are adopting to value the inventory. That is valuation assertions. Rights and obligations, what are the rights? What is the right of that company on that inventory? Is that liened, or is that been any asset has been mortgaged? What are the rights and obligations? This is the assertion. Presentation and disclosure, this depends entirely on the nature of the entity. If it's a company, there are formats. If it's a partnership firm, sole proprietorship firm, there are certain formats which we need to comply with. Steps to prepare an income statement, that is our profit and loss account. These are the basic headings which we need to focus on while preparing income statement, though there are certain different formats for every entity. Revenue, that is the sales, other income of any entity. COGS, that is cost of goods sold. That is basically your purchases, direct expenses. Gross profit, this is basically your sales minus purchases and direct expenses. You will come to gross profits, and adding up the closing stock also. Operating expenses, income, you will derive to income, that is the final income, and after deducting interest and taxes, you will come to the net profit. That is the income statement. That is the basics of income statement. Now, common income statement mistakes which we often make, that is the categorization, that is the classification of income or expenses. Let's say there is subsidy. So we need to understand if it's a capital subsidy or if it's a revenue subsidy, where we have to classify such income. Adjustment and expenses, this is basically pertains to outstanding expenses, prepaid expenses. So we need to account those outstanding expenses in the P&L even though we have not paid for it. So those are the adjustment entries which we need to pass. How to prepare a balance sheet. These are the broad headings, and there are subheadings pertaining to different entities. Assets, liabilities, non-current assets and current assets, liabilities, non-current liabilities, and current liabilities. Determine shareholders' equity if it's a company. Classification into proper heads, like what needs to be classified as an asset. In that asset also, what needs to be classified as a current asset. And there are further classifications. If we are preparing a balance sheet for company, there are further classification for assets also. So we need to diligently classify such assets or liabilities, any financial statements item. Let's say debtors. So debtors are now further classified as if they are bad and doubtful, good and doubtful. So what is their category? We need to further classify it, and also we have to nowadays provide aging. Aging is basically if it's pending for less than 6 months or 90 to 180 days, that is the aging we need to prepare. For less than 1 year, for one more than 1 year, 2 to 3 years, or more than 3 years, that is the aging. So we need to classify all such assets very minutely now, because a lot of breakups have been now required to be disclosed in the notes of accounts. Understand the format for various entities. Now, different formats are set for different entities, which we need to follow. This is cash flow statement. We will note down our opening cash flow, cash balance, which we will take from the last year's balance sheet. And then comes operating activity, investing activities, and financing activities. There are two methods, direct and indirect method. Opt one method and calculate what is the operating activity, what is the investing activities, and what is the financing activities flow. Add the numbers and then add it to the opening cash balance. You will derive at the closing cash balance. Now, many organizations ignore this part, but Amazon, a very renowned company, it starts its financial statements from cash flow. So that is the significance of cash flow. Cash flow basically gives a summary that how much cash has flown throughout the investing activity, how much interest you have earned, how much interest you have given, and what is the addition to your assets or deductions in the assets, or what is the addition or deductions in the capital. So it is the segregation of all three main decisions. So financial decision, it is very important decision. It is backbone of any business. So investing decision, or let's say dividend decisions, profitability decision, allocation of such profits, these all depends upon the financial decisions. Adjusting entries. These are the entries we need to close in that financial year only, like closing stock. We will see opening stock inwards and outwards, then we'll derive to closing stock. And we have to pass the closing entries also. Why? Because it will show the true picture to management that this was the expense which we have not paid in the current year, but this pertains to current year. Suppose there are salary payables. These are the common examples which we incur in our daily life. Like almost all the organization face this. So there are certain salary is one of the very common example. So we do not pay March salary in March itself. Suppose we pay it in April, but that salary pertains to previous year only. so that we have to disclose to arrive at the true picture of financial statements. So outstanding expenses, prepaid expenses, accrued income, unearned income. These adjusting entries need to be passed to arrive at the true financial figures. Depreciation, bad debts, abnormal losses, these are other adjusting entries which we need to pass. Evolution of financial management. Financial management has evolved throughout the time. There was a traditional phase. During that phase, financial management was considered necessary only during the occasions when important decisions were to be taken. So, traditional phase was not wrong, but it has been improvised during the year. Like at the first stage, our skills are amateurish. Now we improvise that skill, we work upon that skill, then we reach to the final stage. So that is the traditional practice. Traditional phase have been improvised to reach to modern phase. So where when we used to see our financial statements, when there was a need of takeovers, mergers, amalgamation, expansions, or liquidation. When taking financial decisions in the organization, the need of outsider investment bankers, people who lend money to the business and other such people to the business was kept in mind. So this was the traditional phase. But now laws are also very strict, and laws have introduced to comply with certain companies have to comply with certain rules and regulations. So they need to analyze their financial statements very often. Transitional phase. During this phase, the day-to-day problems that financial managers faced were given importance. The general problems related to funds analysis, planning, and control over were given more attention in this phase. This is the modern phase. Modern phase is still going. The scope of financial management has greatly increased now. It is important to carry out financial analysis for a company. This analysis helps in decision making. During this phase, many theories have been developed regarding efficient markets, capital budgeting, option pricing, valuation models, and also in several other important fields in financial management. Internal audit is a classic example of this, where we review our financial statements, internal controls, and it's a very broad term which we look upon in the organization very often. So those are the basis. Financial statements are the basis for the company's performance and basis which management takes upon the decision. These decisions relate to acquiring the optimum finance to meet financial objectives and seeing that fixed and working capital are effectively managed. So there is a classic example of Apple company. We all have heard about Apple. We have now there are many products in the market in the name of Apple brand. So once they have faced a severe financial crunch, so that time they had incurred losses. They Microsoft came as a light to them, and they made the investment in the company. And it says that it's a rivalry company, but it made an investment in the Apple. And Apple analyzed their financial statements. They realized that there are so many employees, so they laid off. They are spending a lot on employee benefit expenses, so they laid off approximately 3000 employees. And then they realized that there are certain products which are not as profitable as other products. So they nearly cut down 70% of the products from the market so that they can focus on the profit making products more. So Steve Jobs once said that deciding on something what not to do is as important as deciding on something what to do. So that is the importance of financial decisions, that how to make a company altogether a turnaround. So we can see now today what Apple is. Fixed and financial capital, working capital are effectively managed. The financial manager needs to possess a good knowledge of the sources of available funds and their respective cost. Needs to ensure that the company has a sound capital structure. It should not be altogether a debt oriented company or only equity oriented company. It should be very proportionately classified structure, that this percentage should be their own capital, this percentage from public, this percentage through term loans or unsecured loan. uh, a company is healthy when its capital structure is nicely proportioned. A proper balance between equity capital and debt. Such managers also need to have a very clear understanding as to the difference between profit and cash flow. Bearing in mind the profit is of little avail unless the organization is adequately supported by cash to pay for assets and sustain the working capital cycle. So, as we all know, net profits are different from cash flows. Not all the components in the profit and loss accounts pertains to cash flows. Not all the components in the profit and loss account is basically a cash expense or a cash income. There are certain non-cash expenses, non-cash incomes also in the profit and loss accounts. So we need to see those if we actually have the cash to pay off the liabilities, or we actually have the cash to now further expand in the business. So that is the difference, that profit and loss account is different and cash flow is different. So financing decisions also call for a good knowledge of evaluation of risk. Example, excessive debt carried high risk for an organization's equity because of the priority rights of the lenders. A major area for risk related decision is in overseas trading, where an organization is vulnerable to currency fluctuation. This is the adverse condition situation which we need to surpass, which we actually need to focus on. We need to see our financial statements so that it does not business does not get affected even though we face such vulnerable situations. And the manager must be well aware of the various protective procedures like hedging. Hedging, we have all learnt about hedging, that how to cover the risk, to what extent we can take the risk. It is a strategy designed to minimize, reduce, or cancel out the risk in another investment available to him. For example, someone who has a shop takes care of the risk of the goods being destroyed by fire by hedging it via a fire insurance contract. The insurance is the example, is the very common example for hedging. How much risk you can cover. Why to analyze financial statements? Taking care not to overinvest in fixed assets. We tend to buy more and more assets, but why you need to buy and invest in more and more assets when those are wasted? So we need to diligently invest in the assets if we actually need those assets, and if they are actually that efficient in the operations of business, then we should invest in those assets more. Otherwise, limit your investments. Balancing cash outflow with cash inflows, that is the role of cash flow statements. Ensuring that there is sufficient level of short term working capital. Yeah, sometimes what we do is we tend to purchase or sell more and more, and this imbalances the working capital. Working capital is comprised of current assets and current liabilities segment. So we need to see if we want to buy some inventory in suppose like a month, but we have a tight cash situation in our organization, so we won't be able to buy those inventory. And then if suppose prices of those inventory shoots up, So we cannot take the advantage of the market opportunity then. So that is the management of working capital, which a financial manager has to look. Setting sales revenue targets that will deliver growth, increasing gross profit by setting the correct pricing for products or services, controlling the level of general and administration expenses by finding more cost efficient ways of running the day to day business operations, and tax planning that will minimize the taxes a business has to pay. This is why we need to analyze our financial statements. Somewhere we are not spending too much, or something which we are, suppose we are manufacturing, but it is of no use. Like it is very slow moving product for our business. So we need to take into account such decisions so that a company can grow, and this is why we need to analyze our financial statements. Role of finance executives: financial analysis and planning, investment decisions. These are the people who are responsible for financial management in any organization. So investment decisions, financing and capital structure, which we have already discussed, management of financial resources, and risk management, that is hedging, how much a company can afford to take risk. This is financial decision areas: investment decision, working capital, dividend policy. All such crucial decisions are based upon our financial decisions, which results in the shareholders, wealth maximization, and economic growth also. Financial ratios. These are the ratios which evaluate the performance of the company. Liquidity position. There are several ratios which will depict the position of the company, that how a company has performed in the past years. Liquidity position, long-term solvency, operating efficiency, overall profitability, inter-firm comparison of financial ratios for budgeting. So this is basically working capital, current ratios, quick ratios, liquid ratios. We have now debt ratios, equity ratios, debt to equity ratios, and there are many turnover ratios also. So there are certain ratios which are then calculated annually to see, then we compare those ratios with the past year's performance to analyze that where we have lagged behind or where we have performed well. So that is the inter-firm comparison. And then we analyze what is the reason for such variances. So we note down that, okay, this time some adverse situations happened in the company. So how we can manage such situations in future. So that is something which financial statement analysis can show. Financial analysis. This is horizontal analysis and vertical analysis. There are two types of analysis. So one where we compare present year with past year's performance. That is one analysis. And one analysis is when we take in income statement, we take sales as the base, and then we percentage wise, we see every component in income statement, we compare it with the sales, we take the sales as base, and in balance sheet we take assets as the base. So horizontal analysis, when financial statement of one year and are analyzed and interpreted after comparing with another year or years, it is known as horizontal analysis. It can be based upon the ratios derived from the financial information over the same time span. So you can do it quarter wise also, half yearly also, or annually also. Vertical analysis, when financial statements of single year is analyzed, that and then it is called vertical analysis. This analysis is useful in inter-firm comparison. Every item of profit and loss account is expressed as a percentage of gross sales, while every item on a balance sheet is expressed as a percentage of total assets held by the firm. So this is it. This is the financial statements importance for the management. Financial statements are critical for driving the insights needed to make intelligent, data-driven decisions that benefit the business. Following the steps listed above is a quick and easy way to start properly preparing effective financial statements. While financial statements can be created manually, the right accounting software can make it easier. There are ready-made software, there are tailor-made softwares also to prepare financial statements, and then there you can customize those softwares so that you can read the reports, you can have graphs, you can have ratio analytical approach also to see how the company has performed, how particular financial items has performed. So yeah, that's it. Thank you for your time.
Thanks to our wonderful speaker, CA Priya Rathi, for apprising us, and also my gratitude all for taking time to join the session and making it successful.